Welcome to the daily insights that matter. We begin today's DITM by talking about the surge in the retail loans on the back of festive spending. Now, the retail loans grew by 20% in the month of September 2022. This, by the way, is the fastest growth since the COVID outbreak in 2020. Now, the Reserve Bank data showed that the loan demand was seen across categories for purchase of vehicles, consumer durables, and homes. The home loans, which account for nearly half of all the retail loans, grew 16% to Rs 18.05 lakh crores between the 24th of September 2021 and the 23rd of September 2022, also when the study was done. Now, the personal loans category, which mainly includes credit for domestic consumption, medical expenses, travel, marriage, other social ceremonies, and loans for debt repayment, and accounts for approximately 26% of the total bank loans to individuals, grew at an even faster pace of 24.4% to 9.73 lakh crores till 23rd September. Now, the growth in all sub-segments helped the total retail loans surge to over 37 lakh crore rupees by the end of September. Now, the strong rebound in the contact-intensive services was aided by the resumption of activities and full-fledged celebration of festivals after nearly 2.5 years. Now, despite higher borrowing costs, individual loans increased, pointing to a strong recovery in consumer demand over the festive season. Now, unlike the usual trend, the demand for consumer durables as well as for vehicle loans has been strong along with the demand for home loans. Going forward, domestic demand is expected to remain fairly insulated from the possible global slowdown, and with the onset of the festive season between the October and the December period, we believe that the credit demand will remain steady in the second half as well. India's services sector picked up pace in October, with the services PMI edging up from September's 6-month low number. Now, this marked the longest stretch of growth since October 2016. The services PMI surged to 55.1 from September's 6-month low of 54.3 on the back of stronger gains in the new businesses and increased hiring amid strengthening demand. Now, as we are aware, a PMI reading above 50 indicates expansion and activity, while a PMI reading below 50 shows that there is contraction in activity. A favorable demand for services continued to support the increase in the new businesses and output at the start of the third fiscal quarter. Additionally, the rate of expansion has also quickened from September's 6-month low. The employment rates rose for the 5th month in a row and were seen at the second fastest pace in over 3 years on the back of ongoing recovery in new work. Now, the October PMI numbers indicate that the service providers had absolutely minimal trouble in securing new work in the month of October, despite having to raise their own prices. Now, the service sector continued to remain on its expansionary trajectory as business activity and the payroll numbers saw an uptick to support the strengthening demand. The sentiment towards the year-ahead outlook for business activity has also improved to the highest in close to 8 years. So, what does all of this news mean for you? Despite rising interest rates, the growth in retail loans is indicative of a strong recovery in consumer demand, and the momentum is expected to continue going forward. This will have an indirect positive impact on you. India's service sector picking up pace on the back of improved demand scenario and the ongoing rise in the new business, which is supporting job creation in the services sector, is a huge boost for the economy going forward. This will also have an indirect positive impact on you. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.